on how to de-risk agriculture. And we did see insurance as one possible solution. But there are, of course, some opportunities for improvement, some challenges, various success factors. So we'll look at some of those issues today. I'll truly appreciate if instead of filling the room from behind, if we can fill the room from front. So you're most welcome up front if you want. But you can stay comfortable if you're there. But yeah, welcome. They're not insured. No, we are not looking at disaster risk from our side, but that's okay. So great. So welcome once again. My name is Pranav Prasad. I work with the International Labour Organization's Social Finance Program. In the program, we look after extension of financial services to vulnerable communities, essentially towards more productiveness and more better work life, decent work as we call it. But we all know that all these issues about decent work and access to financial insurance is not just about work life, but also household risks, inclusive of production risks. So we need to look at it in totality and examine the role that insurance can play in this entire exercise. Just before we go any further, how many of us have worked in insurance? Brilliant. So we are thoroughly outnumbered otherwise, besides, which is great. Matthew, yeah. So a few of us have, many of us haven't. So it's actually an ideal opportunity for us to kind of talk about insurance in a more proactive, more productive manner. Which brings me to the issue, what do you think insurance is all about? And the biggest analogy I can draw on is by asking you a very, very simple question. What do you think brakes do in a car? Do cars go faster because of brakes, or do cars slow down because of brakes? Any thoughts? People who have sat in cars, do they have any thoughts? Okay. Thoughts? Confusing, right? Faster. Why do you say that, sir? How do they go faster?
If I was in a car without any brakes, I'd drive pretty slow.
Brilliant. This is exactly the point, the role that we would seek insurance to play. It's not just a protective tool, but a productive tool which can de-risk various mechanisms that we have been discussing. Precisely the fact that if you did not have insurance, you will be more careful, you will take less risks, and by virtue of hearing all those who attended yesterday's session when our colleague from Belgium talked about his farmer grandfathers living on two sides, you will take less risks and be less productive. Insurance provides a mechanism like the brakes to know when you can actually protect yourself, as well as in the same process have access to better, more innovative, riskier but more productive mechanisms to grow faster in an economic life. So all these issues impact us in the microfinance sector, and all these challenges we grapple with on understanding how we can actually ensure the protectiveness with insurance to help people in times of an actual event, but also use insurance as a mechanism to get, let's say, better credit, to get better inputs, get more value-added services, whether it is health checkups, as we will see, or even issues like weather reports and weather inputs in that sense. So without taking too much of your time, let me have some of these issues coming across to you with our wonderful panelists. I'm sure you've read the descriptions in the program sheets, but I'll quickly just give one-line introductions, and please feel free to talk more about your organizations and your work as you talk, but of course focus on the topic itself, and invite you, Philippe, as having been in this sector for long and driving the technical assistance that Grameen Credit Agricole Foundation provides, to first share with us the work that Grameen Credit Agricole does, and you've been working with MFIs longer, but why do you think insurance is important, and what's the landscape that we are working with?
Hello everyone. So I'm Philippe Guichandu. I'm the head of our technical assistance and partnership at the Foundation Grameen Credit Agricole. Okay, here we are. So just in 2 seconds, to let you know what is the foundation. We've been set up now. We're going to celebrate 15 years. Next in two weeks' time in Paris, indeed. And we were set up by the Groupe Credit Agricole, which is one of the largest banks not only in France but even in the world, and the Grameen Trust. I guess I don't have to explain who is the Grameen Trust here. And we are basically investing in microfinance institutions and social enterprises. And we are providing also technical assistance because, as I said, we believe it's very important to be able to have a kind of global approach with our partners. So you do have here the map where we are. We are basically, Africa is a strong focus for us. We've been there, and it's more than 50% of our partners staying there. And then it's Asia, Central Asia. We are not in Latin America, so I won't talk about it. And our partners are serving more or less 10 million people. And so the specificity is that we really work in rural areas because it's around, the exact figures is 83% in rural areas, and 94% are women. And it's the two cultures of the two founders of the foundation. The Groupe Credit Agricole, which has a very strong focus on agribusinesses, and of course the Grameen Trust, which is a strong focus on women. So we started, where do I put? Okay, very good. So okay, you are the guys. Okay, I have to be very careful. So we are what we like to define ourselves as a kind of impact investors. But from quite the beginning, I've been at the foundation now for 13 years, and I think that from quite the beginning, the focus has been to try to support smallholder farmers. And we realized that doing so, it was important not only to provide credit or savings opportunity, but also that insurance was a key for them. And I think I was part of the African Microfinance Week in Togo, and I was quite happily surprised to see that insurance came really as one of the main issue that was described as, because the theme of the African Microfinance Week was on climate change and how we're going to deal with this and so on, and micro insurance was often mentioned as one of the solutions. And that's something that, of course, we realized when we started to work on this. So from the beginning, we realized that, micro insurance, yes, is the right place, Laura, to be. Welcome. And from the beginning, we realized that, it was really important not just to provide this, but that insurance was one of the solutions to protect, to enforce resilience of the clients, to make them able to adapt to the different contexts. At that time, we didn't talk so much about climate changes, but in agriculture, it was a big thing. So we had this very strong focus on agribusinesses, which is, I think, the most difficult things to do in insurance. But anyway, we strongly believe that we could make it. So we did organize a lot of exchange visits. We had a very interesting visit in India, because India is one of the countries where they have the largest microinsurance program. We did it as well in Mexico. We worked some books on this and to try to explain what was there and so on. So it was a lot of, I would say, approach which was made on what we learn from what is happening, what are the issues, and as I mentioned to you, the focus was a lot on agri-insurance. And then we did some pilot project, not very successful. But anyway, I think that we learned from our mistakes. Or no, it's not a mistake. We learned from, lessons learned. That's, and maybe you have good lessons, but you also have lessons that are not working that well. We learned a lot from our experiences that way. And then we decided to go a little bit farther, and so we invested in equity with Acre. Acre is a broker based in Kenya. Now they are owned by Zepre, which is a reinsurance company. And they are mainly working in a lot of Eastern countries. They are working in Tanzania, in Kenya, of course, in Rwanda, in Zambia, and so on. And so they're designing some product, and especially in agri businesses, and then they are trying to use this product with different companies. And then from this lesson learned, we have a specific program we're going to discuss a little bit with ILO. And so after all these experiences, and the focus always has been to do this through mainly microfinance institutions. We had, I remember, a workshop at the second African Microfinance Week in Dakar, where we gather all the microfinance institutions to try to understand, okay, how do you work? How can you work with and provide micro insurance product? So here I come with a question that I have had for many years and that I still have, and that I think still remain, is that to try to understand if MFIs are the good partners to try to promote microinsurance and to sell microinsurance products and to do this way. And I really want to ask you the questions. I mean, do you think that MFIs are the good partners? Yes or no? So who wants to raise your hands? Who believe it's yes, they are the right partners to work with? Okay. Brilliant. Who believe they are not the right good partners? I will raise my hand. Oh my God, what does this guy do here? Sorry?
So Philippe, I think it's great that some raise their hands on yes and others are undecided.
Yes.
And
yes.
I guess you are now throwing a challenge to
Yes.
all of us here on this
Yes,
side
yes.
to try and examine this question in more
Yes.
detail.
So I'm a little bit provocative, but I just want to share something with you. So we are, as I said, we are shareholders of Acre. Acre, they have supported now more than 1.7 million smallholder farmers, providing them with agri-insurance. Last year, they, in 2020, I think they reached 320,000 farmers. And they worked through 45 entities to sell their product. Out of these 45 entities, how many were MFIs? No idea? More than 20, 25? Who believe that is more than 25? No? Who believe that is between 10 and 25? You? Okay. Who believe that is less than 5? Matthew. Yes, yes. Well, I help you. 4. Only 4 were MFIs. The other were rather insurance company and so on. So I just wanted to share with you these figures because it's really see that, of course, first, microinsurance, of course, has to deal with insurance company and that they're working with this. But why? Why MFI don't do more? Why? What is the issues? Why? I mean, Acre, which is pretty well known, hasn't reached so much MFI. There's internal reason, of course, but there's, I think, another reason, which is more links to what MFIs do. So here we have great people. They're going to say that, Philips, you're completely wrong. We can do it, and we're going to make it. And we will see with the program we have with the ILO that okay, we still believe in it. But I think there's really an issue in terms of what the sectors can do to do more in terms of promoting micro insurance.
So thanks, Philippe, for actually highlighting the challenge and throwing the ball, really setting the cat amongst the pigeons, as they call it, to now think through some of these issues that Philippe has been mentioning and see how they are actually being on the ground. I think, Yannick, the stage is set for you. You've been experimenting with insurance. You are a nice MFI based in Cambodia, doing stuff locally, and now wanting to add insurance to your portfolio. Plus, you have the advantage of insurers around you in Cambodia wanting to work with you. So why this thought of actually wanting to work with insurance, and what are the current issues that you are facing?
Okay, yeah, thank you, Philippe. I didn't realize you were going to challenge me from the start on this one, but that's and frankly, okay, I mean the jury's still out, I think, in terms of how effective it's going to be. So we've received support from ILO and Grameen to get to help structure that framework of how to have the MFI, which I'm the CEO of, Cambodia Microfinance, which I'll tell you a bit about, be the distribution partner of a microinsurance service provider. So we've been doing it in the health sector with this microinsurance provider for about 10 years, and that has worked very well, actually. And I think maybe you're talking more about the crop side, agriculture insurance, which I think has its own challenges, which we won't go too much into detail now. But from the health side, I think the jury's not out, and we are convinced that it works well, maybe. So yeah, anyway, just highlighting that a little bit. So just first context in terms of Cambodia. So we're a microfinance non-deposit taking institution. We work with rural families at around 70% and 30% in agriculture. And so our average loan size, so it's Cambodia. So anybody have questions about that, please, no, let's not talk about that today. It's at around just over $1,000. So the portfolio is for about $47 million for 21 branches, which you see spread across the country accordingly. Right. So that's the context for who we are as an MFI in broad terms. Why? Okay. Just to maybe highlight a little bit, because it'll be important to understand what drives us and why we wanted to add microinsurance quite significantly and diversify the microinsurance products that we would distribute, to understand a bit the context. So as you know, Cambodia, I'm sure many of you, it's a highly competitive market. So borrowers have a choice of between 5 and 30, formal institutions, depending on the village and where it's at, to go and choose to take a loan from if that's what they want to do. So that's the first part. The second part is that Cambodia has an important lack of social safety nets. So when vulnerable families face a crisis, be it linked to health or business failure or whatever it is, there's not much that they can access. There's obviously NGOs doing some work, but as far as a public response that's accessible to these low-income and vulnerable families, there isn't much there that they can resort to. So as per latest research we just did, which is a post-COVID research, so there's a little bit of obviously situational bias there in terms of the results, but it was people losing their jobs. So if one of the family members basically getting not having access to employment anymore, business failure, and then a little bit in health issues and in climate events. So the numbers were about 60%, 60%, and then 4% for those different drivers of PAR in our portfolio. So in Cambodia, we are licensed to be a referral agent of microinsurance. So the insurance is regulated under the Ministry of Economy and Finance, while we are regulated by the central bank. We need to get approval from both in order to be able to distribute those products in our branches. The insurer will only allow us to do that, the regulator, if we have an insurance agent that is positioned in each branch. So that means that the insurer needs to pay for that insurance agent to be located in our branch, and then we can refer the borrowers who come at the disbursement time or whatever it is to talk to that insurance agent and contract an insurance contract on whatever different types of products that we have available in the branches. So that's how the regulation in Cambodia is structured. And the products that we've had so far, so as I mentioned, for about, just over 10 years, it's a bundle for health, personal accidents, and life. So if they have a health issue, they have access to around 200 different health centers that they can go to and get treatment according to their complicated insurance contract that they have, and obviously in terms of death or in terms of dismemberment, for example, there's different payouts that they can get. I didn't mention that, but the cost of that is between $12 and $25 for a year's coverage. And generally, it's around 50% of the borrowers who subscribe to that health insurance bundle at the time of the loan disbursement, which still happens at the branch. So that's a good number. It's around 3,000 to 4,000 disbursements per month. So we're getting around 2,000 insurance contracts for health that are being signed each month. So that I would say is working quite well. And then we've just launched a few agricultural insurance products, which are parametric, so meaning they're based on rainfall data in terms of excess or insufficient rainfall, and then there will be an automatic payout to the borrowers who subscribe to that, depending on the triggers. So that has, so that's where the jury's still out. I won't go too much into detail of that, but we've just started that, and that's really what the support from ILO and Grameen has focused on, is getting expertise, understanding the process for designing products, for processing claims, for reinsuring that portfolio, etc. And then another limitation in Cambodia is the regulatory limitation around microinsurance, which means that we cannot give it for more than 1 year, and we cannot give a payout of more than $5,000. So that obviously has a lot of challenges, for example, for the life or for renewals or for getting a good system in order to run that effectively, notwithstanding the need to have an insurance agent. So if you think about it, you've got premiums of between $8 and $25, but you need to have a full-time staff who's processing that. So you really, microinsurance is really about getting that distribution and getting that scale because the premium numbers are so low. And then when you have to add all these human resources by the regulator, obviously makes it very, very challenging. Right, so I think going to the key point of, what was our intention, what motivates us and really drove us to spend all this time and resources in building partnerships and in building products, in really trying to bring that value add as a credit provider to our market. The first obviously was a more general one in terms of our social mission to help our borrowers be more resilient, to reduce poverty, to have more successful businesses, to be better protected in their health, and to have our mission to be there as an agent of change with the development outcomes be supported by that extra level of protection. So I mean that was a no-brainer for us. It seems like a low-hanging fruit insurance to deal with the risk that I mentioned before. And so we thought, let's see how much we can really incorporate a range of products that will help to address that larger development outcome. And competitive advantage was also an important one. So there's some microinsurance in Cambodia that are for most tied to MFIs. Most of what they do is credit life. So it'll be a mandatory product that you pay a small amount on, that in case you die will cover your loan. It's an unexciting product, I find. It's good to have. Actually, the payouts for those products are very low, and it's basically more of a money-making machine, frankly speaking, than an actual coverage and protection. That's my perception. Let's see what people think about it anyway. Anyway, the fact being that it doesn't add much value as a distributor, as a microfinance institution to the market. They don't say, I'm going to go back to this guy because they have a credit-like product. That I can be pretty confident in saying. So we thought, let's try to find more ways that we can actually add value as a microfinance institution, differentiating ourselves from our competitors by providing something which meets the needs and the wants of our borrowers. I'll come back to that in a bit. Obviously, reducing credit risk. So as you saw, the drivers of that. So the idea is to really match the products that we're going to develop to the reasons why people are becoming delinquent. So it seems obvious, of course. So 4% was due to health. If we can provide a health solution to the borrowers so that they don't have to really be resource constricted when they have a health issue. They can get treatment faster, and also they can get better treatment, changing health-seeking behavior. Obviously, a lot of low-income Cambodian families don't go to formal health institutions, so trying to change that in order for them to have less long-lasting effects and less dramatic effects on their health was an obvious one. Climate risk, I mentioned, was also at around 4%. So that's something that we thought was obvious. And then now we're trying to think about other products which are a little bit more complicated, linked to, for example, job loss or business loss. So there's been some quite exciting products, for example, linked to daily laborers. So if there has been a climate event that has that has impacted wage laborers from actually getting access to employment over, let's say, 2 to 3 weeks. There can be an insurance product they develop, that they subscribe to, that will provide them that income during the period where they did not access their daily wages. So what's cool about insurance, so coming as 15 years in credit, is that you can actually insure pretty much anything. Anything you think of, you can develop a product around it. And that's as long as you have the data and the processes, you can do it. So there's a lot of innovation, a lot of ways that you can be, bring that value add based on the local context and on what the risks are that are realizing for our market. So yeah, and then of course there's an income argument there. So the way it works is that out of the premium, say $20, there's going to be a percentage of that, which is going to be given to the distribution partner, so us as a microfinance institution, to enable the insurer to have access to our market. So that comes at a cost for them, and it comes as a revenue for us. So obviously you try to balance that, because ultimately that cost will be borne by the borrower. And we're dealing with low-income families who have, for most, very little understanding or knowledge of what insurance is about. So getting them to commit to make a payment on something that is hypothetical is very challenging. So obviously you need to, keep all those costs down, be as efficient as possible, which again, because of the regulatory environment and because of the operating costs associated to that, it makes it challenging. So that, we deal with that with working with actuaries who are going to design products that, well, maybe the payout isn't that big, but the entry level of the payment will be lower. Then you have to build efficiencies throughout that. I think that was the end, was it? Yeah. So I mean, I think just to say that right now, I think the point is for crop insurance, it's complicated. Premiums are high. I think we are now for example, our rice product is at $6 for 1 hectare of rice, and then you get a $100 payout. Now the cost for actually planting your 1 hectare and all the costs of it is around $600. So meaning that you're gaining 15% back of your investment through that $6 payout. Again, that's just a way to balance that, to make it accessible. $100 always helps, but obviously it's still not going to be really completely addressing the loss that you have. So we could have said, well, I mean, we could put it at 6 times 6, make it $36, and then you get 600, but it'll be very hard to convince somebody to pay $36 to that. So we're just trying to balance that, yeah, let's see where that goes. Yeah, thanks.
So it's nice that you brought up all these issues, and a couple of interesting things you said. Low-hanging fruits, it was a no-brainer to get into insurance, income streams, and it gives you a separate thing. And you seem to be reasonably comfortable with your health insurance product. So what are the, perhaps, let's say, 2 or 3 top lessons from health that you can draw for these new products that you're saying, and especially agriculture? We'll talk about job losses later, but especially in agriculture that you've got into. A couple of things that may work in agriculture that you've learned while doing health?
So that I've transferred from the health kind of process to the agriculture, you're saying? Yeah, actually, not much actually. So it's more about the sales process and the point of contact and the point of sales and how to incorporate that and make sure. So now the whole process of having the teller who's coming to disbursement, have that initial chat, the loan officers having some preliminary discussions with borrowers when they're doing loan assessments. So that whole kind of communication and information process, distributing flyers, has been transferred. Yeah, sorry. But the point of actually how you're going to convince somebody to buy a crop insurance product compared to how you're going to get them to buy a health insurance product, that has not transferred at all. And there has to be a big mind shift on the part of those insurance sales. So that's not for us, that's for the insurance company actually, to really, convince somebody to buy and explain to them that it's going to be based on X number of days of rainfall and whatever it is. It's complicated.
So perception of risk and how can that risk be translated into insurance measures for MFIs can be a challenge, as this mic can be. So let's to this. So that's interesting. And I guess this brings Soleil you into the picture, because you, as the global director of insurance of large group of MFIs and NGO credit institutions, World Vision you've seen one example of somebody having done health insurance and now moving into agriculture. You have been focusing across geographies on health in a big way. So, Yannick seems to be saying doing health, well, I wouldn't say simple, but doing health is simpler than some of the other products that can be. But we all know health insurance is complicated in terms of provider adjustments, where to find the hospital, where do they go and seek actual health benefits or actual benefits of insurance and that. So what are some of the things that you do across? It will be good if you can share with us and some of the lessons that are coming up.
Yes, thank you. So Vision Fund is the microfinance entity of World Vision. We are under the same roof with World Vision. It's the microfinance, it's a network of MFI. We are in 25 countries, so we have 25 institutions, and we operate since 20 years. We just celebrate our 20th anniversary. 25 countries across 4 continents. We have 1 million borrowers today, and 69% of them are women, 65% in rural area, and we are really focused on vulnerable population and hard-to-reach population. In terms of insurance, we started our insurance journey 20 years ago, of course, with the Credit Life product, because we are an MFI, we wanted to protect our loan in case of death of the borrowers, and then we extended our Credit Life offer to include some more components into that product, and then we extended to cover more people in the family, not only the borrower, and then we went to some other products. Of course, today we work with around 11 different products. So on life, we have the Credit Life, Term Life, Savings Life, Education Life, Health, Hospicash, and then we have the other ones, business asset insurance, business interruption insurance, motorbike, property, crop, livestock insurance. But we focus a lot on health, that's right. Today we have 2.6 million people being covered at Vision Fund, and in terms of premium, we collect $11 million US each year as an insurance premium. In terms of objective behind having this insurance is, of course, the impact. We want to impact more. We want to impact deeper and broader, so it's really focused on impact that we can provide to our clients. But of course, as Yannick just mentioned, it's also a matter of income. If we take, for example, the example of Vision Fund Mexico, 40% of their profit comes from insurance. And we are not an insurance company. Of course, we are an intermediary. So we just take the commission or the distribution fee out of the premium. But for an entity like Vision Fund Mexico, it represents 40% of their profit comes from insurance. So yes, insurance can be profitable for MFI, for sure. Yeah, here you have the example of our health products. We just put few examples, and I will not go through all these examples, but it's just to show you the diversity of products that we have. As an insurance team, a global insurance team, our role is really to help our MFI locally to better understand the needs, to understand, for example, if we take the example of health, to understand the national scheme from the government, the national scheme in place, to see what are the gaps, to understand from clients what they would like to be covered in addition of the national scheme, for example. We never implement anything that will compete with the national scheme. That's why Hospicash is very convenient, because you can plug the Hospicash in a country where there is a national scheme in place and people are registered, or in a country where there is no national scheme in place. And you can see this diversity. So our role is to better understand the needs in order to design a product that is really fits with the needs of our clients, and then to go to the local market, local insurers, and to negotiate the best terms and conditions. Of course, it's not always the cheapest option, because it's like important to have only 1 or 2 exclusions and not a long list of exclusions, for example. So it's really to negotiate the best terms and conditions for our clients. Yeah, we can. So what we have also at Vision Fund is a diversity of process. So from one country to another, of course, the processes are far different. If we take the example of the distribution model, in some countries or with some products, it's mandatory, like credit life is almost mandatory in all our MFI. Among 25 MFI, we have 24 MFI with insurance. Only one does not have insurance, it's Mongolia. But otherwise, we have in almost all. Distribution mandatory for the credit life, not always. Some credit life are voluntary, but most of the time it's mandatory. And we also have the opt-out model or the opt-in model. We, as the global insurance team, we really push for the opt-out model. Like by default, they get an insurance product, and if they want to take it out they can take it out. We can see, for example, again, if we take the example of Mexico, people, they come to Vision Fund to take a loan because they know along with the loans they will get an insurance product, a health insurance product. Of course, credit life, but also health. So it even attracts people. And we believe on the opt-out model because, of course, it creates volume. Then people, they will get claim because it's health, it's hospicash. We will get claim, we will get the claim settled in few hours, and then people will be happy. The word to mouth in the community will be spread, and we have the satisfaction. You can see some diversity of process in terms of premium collection, claim process. Sometimes we have we try not to have a long list of documents from the insurers, but sometimes it's only one document sent by WhatsApp to the insurer, and the claimant will get the reimbursement within 4 hours, for example, on his mobile wallet, for example. So what is important for our MFI, having a global insurance team, is that we can really compare and we can have some standards, and we get sometimes a very funny proposal from the insurers with a credit life at 2%. No, it doesn't make sense. But we know that because we can compare with some other countries. It's context appropriate, of course, but still, there are some standards that we can see. We can also help the insurers. I'm thinking about DRC, for example. DRC is a country not very mature in terms of insurance. So we help the insurer to be confident because we have some experience in some other countries with a context that is quite similar. And so this is really what brings in addition to have this global insurance team looking around the network. Oh yeah, this is an example of Vision Fund Ecuador, where we have, this is to show the diversity of service. Even on health, we have very different health products. Ecuador, if you have noticed just before, we have the telemedicine, we have a cash allowance per day of hospitalization, but we also have this service that is presented here, so yeah.
Yeah, so before I run the video, I think 2 points that Solen mentioned which bear importance is understanding of course, contextualizing the insurance offering in terms of processes and in terms of the product, and also the peer learning that you mentioned, that lessons across geographies have helped you in developing your portfolio along. And this is perhaps an example of how a specialized service has actually helped people on the ground. So let's have a quick look at that.
Banco Vision Fund Ecuador, cumpliendo con el compromiso de mejorar la calidad de vida de miles de familias ecuatorianas, constantemente busca alternativas y nuevas oportunidades de servicio que permitan llegar cada vez a más sectores vulnerables y generar cambios positivos en la vida de quienes lo necesitan.
Actualmente nos encontramos con nuestro proyecto de la ambulancia naranja acá en el sector de Aipur, una comunidad cercana al polígono de riesgo que se generó a causa de la luz en el cantón Alausí. Para nosotros como banco es importante involucrarnos directamente en estas circunstancias dolorosas que viven nuestros clientes, y es por eso que el día de hoy, con nuestro proyecto de ambulancia naranja, estamos presentes acá entregando medicinas a las familias de nuestros clientes y también a las familias del sector.
Este proyecto es el resultado de una alianza estratégica junto al grupo empresarial Raúl Coca Barriga. Además, aplicando estrategias de responsabilidad social y de la mano de World Vision Ecuador, se logró impactar a más de 300 personas, entre clientes del BVF, no clientes y sus hijos. a través de un sistema de salud gratuito que permita mejorar sus condiciones de vida.
Estamos el día de hoy realizando unos controles médicos a los niños y niñas menores de 5 años. Estamos también haciendo un control a los adultos mayores, a los niños en edad escolar y a todas las familias. ¿Para qué? Para contribuir en su estado de salud, para que ellos estén mejor, para que ellos estén con una salud adecuada. El día de hoy también nosotros estamos pues aquí coordinando para entregar diferentes tipos de medicina, que gracias a World Vision pues estamos hoy día haciéndonos presente para entregar las medicinas, y también nuestro aliado principal, que es Banco Visión Fund.
Gracias, Ambulancia Naranja.
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 Banco Visión Fund Ecuador.
So it was the video of the first month, but of course we have today 40,000 people being registered and with this insurance product in Ecuador, and what is really nice with this service of the ambulance, and this is as a top-up on the insurance product from Raúl Coca Barriga, is that it really serves everyone, because this ambulance goes village by village like this, stay for a day in the middle of the village, and anyone can come. It's not only the Vision Fund borrowers, not only their families, not only World Vision beneficiaries, it's anyone in the community, and it's free of cost, of course, and it's even not an opportunity for us to sell the insurance product, because we are not allowed to sell any insurance product to non-borrowers. But with this service, we could impact much more than only our borrowers and their families. It's really the whole community. So
great. So I think two things that actually again come out is the multi-stakeholder approach. So you read the names of the partners who are actually playing a part. So it's not just Vision Fund, but there's a requirement for medicine, there's a requirement for organizing stuff, and of course, on-the-spot activities. So multi-stakeholder approach is important for any insurance to succeed. We certainly don't believe insurance standalone can actually bring about change, and I think Solen has very nicely mentioned that it's a community service that helps in facilitating an understanding of risk in that sense. Yeah.
I wanted to give another example from Uganda. So in Uganda, we have a great product. It's also an hospice product. And we realized that our staff, they sold after 1 year to 90% of the borrowers this product. It's opt-out, so it helps to have 90%, but still, 90%. And what we realized, it's only 3% of them took the family product. 97% the individual product. So we were wondering why, and so we were encouraging our staff, training them again to impact more and to push for the family product. And we could see after another year of operation, now we reached 35% with a family product, so this is great. And 60 Decibels has conducted an impact study to understand the impact of insurance. And of course, among the claimants, so people who got a claim, 94% said that it was a great benefit. Of course, they got a claim. 70% of the claimants said that it has reduced their stress. Again, of course, they got a claim. But what we realized also from this study is that even for those who did not get a claim, 50% of them said that it has reduced their stress, and 53% also said that they were able to invest more in their business because they knew they are covered just in case anything happened. So this was a nice study, and it's one of the first studies that we have on insurance and the impact.
So great. We saw a lot of people thanking Orange Ambulance in the previous case, but I think it's important, and thank you for sharing this, an actual example of how people's lives have changed because of insurance and how they've helped. So one-line background before we run the video?
Yeah, so this video is about Jericho. Jericho is a boy from Malawi who registered with a health product. And this one was not hospice, but health, so covering the medical service. And this is how this insurance has impacted his life.
Zilanga ni Jericho Shwara, labari 208, parobani za 50. Mafura mema umano bashambi di amaso, parizira boso zibiri. Maso aja maka ani vura, yambira nili mwana. tafika zaka 7 tambo zindiyo rini ini vulola maso zibere wepeza kuti takhala rini nyumba karuka kubwalo kuti nione dzuwa makazo rizi makazo ni vura fa masomo makazo rimwe adzadza misonzi matongo
ona kuti zilonda zija sizinapole lulasimaso samaonanso bwinobwino ku sukulu ndiye kuti wayima nthawi imeneyi ya standard 6 ikuona kuti anzake analemba mayeso eye sadapite chifukwa cha vuto limeneli 2020 ndapita ku World Vision ndafusa adanithandiza ni abambo daona kuti ni pabwino potheka kuti ife tita mwanayu tipangireko chani ufulu kuti mwina atithandizeko vuto limeneli poti chizunga kuti dining achipatala chake kuja analandira treatment bwinobwino kenako zilonda zija zinambota usiyana nimene zinalili mbuya
moyo panopa ndimasiyanitsa chifukwa kalelo sinimapenya koma panopa ndimapenya komanso kalelo mbali ya maphunziro pa bolodi ndimapenya bwinobwino olo ulemba pakope ndimapenya bwinobwino koma kalelo sinimatha ulemba komanso upenya moti panopa ndi form 1
nachimva ufulu kwambiri pa banja langa kuti ufulu mazimu yatani yatichitira ubwino pa banja lathu ufulu mazimu ni chinthu chabwino zedi pano panuuza mtundu wa Malawi tithamange khalacha mamembers aufulu.
So Jericho is now back to school. He is in high school and he can play football with his friends that he could not do before. I met his mother in September in Malawi, and it was really nice to see concretely the impact of what we are doing.
So thanks, Solène. I think both Solène and Yannick have actually alluded to the fact that for microfinance institutions, it makes sense to have insurance in their portfolios, given the processes and given the right set of context. Insurance can work, and they can act as not just distributors, but also as agents of change. But without getting too esoteric, I think Yannick pointed out that you can insure a lot of things provided the risk is right, and more importantly, I'll add, the price is right. So you need to actually keep those perspectives in mind. And I guess to get this entire ecosystem going is where network organizations and convening organizations have a role to play. And I guess that brings us squarely to what ASIR and Microinsurance Network does. I think we can broaden the discussion a bit more beyond health and just agriculture to issues related to climate change that are now impacting all of us and all around us. And climate risk insurance is becoming more and more important. But before I invite you, Asir, let me just quickly share with the audience too about how the entire ecosystem is now driving change on insurance side. I thought we'll do it earlier, but we didn't really get into it. But let's do it now so that it sets a context for the balanced 25 minutes that we have. SDGs are important, and SDGs are now being driven. Definitely, they are the mantra for us at the United Nations in various formats. And out of the 17 SDGs that are there, we certainly believe that insurance has a big part to play in at least 6 of them, which involve various aspects of human life. So whether it's poverty alleviation, whether it's food security, which we are all talking about here, and those of us who attended yesterday would have heard all 3 top players had an insurance element in their programs that they were doing. And if you see all the 10 semi-finalists also, please do read their profiles. Have work around risk management, managing how they are improving agricultural practices using insurance. So that's, I guess, very heartening in that sense. Of course, the SME and the industrial sector, good job and economic growth is what, of course, we are looking at. And because of this growth in economic conditions, inequalities can get reduced. Certainly, SDG 13 on climate action is what is now being focused on, and Asir will share some opportunities in that sense. But more importantly, and that's why I've circled it in purple, is this entire issue about partnerships. Insurance, even for MFIs or for financing organizations or for everybody, is not a one-person take-all game. You do need partnerships, you do need stakeholders, and you do need an environment that can have multiple people trying to do, because as you've seen, you need hospital services, you need medicines, you need health service providers. In agriculture, you need loss assessors, you need agroeconomists to help, etc., etc., etc. So Asir, over to you to describe how does the microinsurance network try and get some of these stakeholders together, both as insurers as well as MFIs, and move the ecosystem forward.
Okay, thank you. So first I thought, before coming, I wasn't sure if I should do actually a description of the microinsurance network, because I wasn't sure how many people were going to show up, and maybe only friends were going to show up, so I didn't really need to explain this stuff. But I see a lot of new faces, so it's great. Maybe it's because we're in the chapel, so that makes a difference. So where is the microinsurance network? So the microinsurance network is a multi-stakeholder membership-based organization. We're based here in Luxembourg, and we basically put together institutions and individuals who are interested in developing tools, risk mitigation tools for low-income families and MSMEs. Those risk mitigation tools very often come with insurance, but it doesn't have to be restricted to insurance. It can be all value-added services that come around. Where do we come from? The MIN was born like around 20 years ago, when everyone was talking about the wonders of microfinance. Microfinance was amazing. It was getting everyone out of poverty, but then something happened and poverty was back. So it's not. There was a problem there, and there were actually no insurers offering any protection against this. So a group of people got together and said, okay, what do we do about this? Like it was mentioned many times, credit life was the basic thing that was in the beginning was being developed. I think also Yannick mentioned it's not really very exciting to have credit life in general, but credit life protects, it's a minimum protection that everyone should have. It also protects the institution, actually, so that's how it started. But things then started changing and evolving, and then people started realizing, okay, if our focus is to protect our customers, if the idea of having microfinance institutions is because we really care about our customers, then we need to go beyond this. We need to protect them. We need to see how we take them out really out of poverty, and not only like a superficial way of, okay, that's fine, you have a little business and then you're on your own. So things started to change. There was also a lot of innovation and procedures changed. So getting new clients becomes easier. Claims management has also been changing, because in the beginning, all these things are actually very expensive and complicated. So big insurers that were not really interested in having small premiums that cannot really cover all of these things. So while things started evolving, these things became easier. There were, also the thanks to all the organizations that got together 20 years ago to create the microinsurance network, started putting their heads together, and very smart heads, they came up with stuff that started bringing solutions. But even with all of this, we still have around 5 billion people who are not insured. So we're still very far away from where we should be. And interestingly, even though all of this started from the microfinance sector, nowadays, or at least in the years, it was kind of divorced from the microfinance sector. So what we've noticed that is in the microinsurance network, that although we're in this very important hub of inclusive finance, which is in Luxembourg, we still feel that we're not really integrated enough. There is still a lot of work to do to do things together, and to have bigger partnerships. As I was saying before, like any MFI that claims to be customer-centered should have some sort of protection for their customers. If they don't, then I don't know, those claims could be revised, maybe, I don't know. But there is when, you know, when with this entire sector, one of the big problems is for impact investors, for example, insurance is not usually, well, I say usually because I'm diplomatic, but I've never come across anyone who takes insurance as a metric for impact, for example. So that might be, you know, I mean, not yet. I hope this will change soon. We will make it change, hopefully. But yeah, so anyway, so that's these type of things are still lacking. There is a conscience that, I mean, as I said before, if you're, you know, if you're involved with your customers, you will realize that they will, like, to protect them, you will develop some sort of insurance. The good thing is here, we are with MFIs that are very good examples. They are not the majority yet, but you know, they're very good examples. And I'd also like to mention that this, although there are no metrics in the impact investment side for insurance, there is an increasing conscience of the importance of protecting people. And I think more in the development world, in the you know, one that has social development factors included, maybe not from the, as I said, like the investment and very financy part of it, but more in a social mindset, do take it into consideration. I think yesterday's ceremony was a great example, because all the finalists had one differentiating factor from many MFIs, and it's basically that they protected their clients, and they protected them through different types of insurance products. And so that's, you know, so people are looking at it. So maybe if you're looking for investment and maybe you say, okay, maybe it's not worth it because we're not gonna get more money out of it, but at least you need to know that it will make a difference. It will make a difference from the top, and it will also make a difference, of course, from the beneficiary side. From what Panav just mentioned before, which is one of the crucial things, is the multi-stakeholder thing, the partnership, the importance of partnerships, and that's where we come in. You know, that's where the microinsurance network comes in. You know, we support any new entrants or people that want to go further, or anyone that is involved in all of this process, which is a very difficult process and that you cannot do alone. You always need to have partners, people that, you know, it's through the partnerships that this is going to work. So we actually put people together and push for it to work through, of course, the combined knowledge of our members, which luckily we have very great members that are doing a lot in this field, and they're working a lot with MFIs as well. Well, we have the ILO, of course, with insurance facility, but Grameen Credit Agricole, Vision Fund. You're not a member yet, but they will become a member maybe afterwards. We have a conversation later. But yeah, but many others, you know, like we really put the combined experience of many of all of our members actually, because they become members because they want to share, and they want the market, they want the uptake of microinsurance to increase, right? So yeah, so and just to go into, you know, it is a complicated process. There is a lot of money in the development sphere. So the big institutions are investing a lot of energy, a lot of money into it. I mean, you have BRS, the Belgium Raiffeisen Foundation, that does courses. The Swiss Development Corporation, GIZ, CGAP. I mean, you have thousands of it. But now with climate change and the climate change discussions, things are going beyond that now. So before, all of this discussion was very, you know, it's a very small part of the discussion was insurance, and we really struggled getting people interested in the topic. We struggled getting people into the insurance room in a microfinance conference. It's getting better, but you know, but we're still working it. But now with the climate change discussions, things are changing. Why are they changing? unfortunately, I mean, everyone, I mean, that's not in the micro sector, in the macro as well, I mean, in any sector. You think of insurance when something happens. So it's like you don't want insurance because nobody wants to really to pay for insurance, but you want the claim, you know? And so when something happens, then you think, oh, I should have taken insurance. And with climate change, that's what's happening now. So people are seeing things happening. People are seeing that, you know, with crop, but also with diseases that are appearing suddenly that didn't exist before or were not that widespread. And so, okay, now we need to do something. And so who is doing that? And in the COP conversations, they have been talking a lot about this. It's been many years with the economic loss and damage reports that started. And I think it was 2 years ago then they decided, okay, some countries that felt their responsibility into, you know, they knew that they have some responsibility in the climate change and for what is happening. They decided, okay, we're going to put a bunch of money into this pot to develop solutions for climate resilience. And so that's how the Global Shield for climate risks was created, for short Global Shield, which is now funneling a lot of more millions now into developing solutions. So what I want to come at here is basically, it is not easy to develop products or to have partnerships, to develop innovative solutions to, you know, to protect your clients and your microfinance clients. But there is a lot of funding available to help you with that. There are a lot of organizations available to share their knowledge and their experience, the failures, the challenges they are facing. And at the same time, you have also the regulation that is moving, it's also evolving and moving into that direction because of all these conversations.
Yeah, thanks, Asit. I think it's important to see that the opportunities that are emerging and the opportunities that are existing, whether it's the Global Shield example or the Insurance Development Forum example that are coming up, and all of us here are parties to some of it, or most of it in some extent possible. So not just for insurers themselves, but for anybody who's involved in financial services, anybody who feels risk is important, I think this is a perspective that we need to keep in mind. But we need to get back to Philippe to answer his question. So, Philippe, you've heard now examples of different kinds. You've heard colleagues mentioning the way it has worked with them, some continuing challenges, etc. So, what do you feel is concretely that can actually be learned from these examples, and what is Grameen Credit Agricole actually doing with some of these is something I think we'd like to understand.
Yes, and you have the movie on there? Not yet?
That's my secret. I will run it, but
so maybe I was wrong to say that I didn't believe that MFIs were the good, but we have here a very good example. I mean, you know, it's like in microfinance. In microfinance, when you visit the clients, I mean, I've seen hundreds of them. I mean, you always see the success story. You know, you always see the nice people that came with 100 euros loan, and then 5 years later, he has small companies with 2,000, 3,000 loans, maybe 10 employees, and so that's the success story. But you know, it's not the majority. It's not the majority. And what you mentioned, and on here, you have this success story, and we're working with them and very pleased. I mean, they are great companies. But it's not enough. If we look at our partners, we are dealing with more than 80 partners. I mean, of course, and I fully agree with what was said in terms of credit life is fine, but it's for your company. It's not for the clients, because at the end, once you are dead, you're dead. You know, I mean, okay, maybe for the family, but when you're dead, you don't care anymore. So we still believe there's still a lot to be done to convince our partners. There's a lot to be sure that, I mean, they understand the needs, not only for themselves, because I think it's a little bit I mean, if you see that it's just to reduce your risk, it's just to increase your income and so on, it's not enough. I mean, you're here for clients. I mean, what is the most important thing is what is the protection you can bring to the clients. For you as an institution, of course, but I mean, if you only look at this, then you might think it's too risky, there's not enough money behind, and the business case is not there, it's too complicated, you have to deal with new partners, I mean, the insurance company, that is different things and so on. So you have to think first for the clients. And for that, you need to convince the board, you need to convince the CEOs, you need to convince the staff, and that's a very long process. It takes a lot of time, it varies a lot, and that's why we do have, as I said, I strongly believe in microinsurance, believe me. So that's why I don't give it up. I think that we need to find solutions, we need to take time, it takes time for that, and that's why we do have this very good partnership, I cannot say more than that, but hello, of course, where we have this specific program, where we have these specific programs where we try to strengthen the capacity of our partners to do more. And how to do more is by training staff, by exchanging ideas, making people understand what is happening within the vision group, with chairman and so on, so that you learn from this, and based on this you are getting convinced, and because you're convinced, you are ready to do more, spend time, maybe at the beginning lose a little bit of money, because it might be costly at the beginning, but it's an investment for the long term. If you don't have this vision, it will not work. So that's why we have this very short video, but the program we do and what we're trying to do with a few of our partners.
To actually operationalize.
Yes, operational, and to do things concretely.
Oops. I need to go one back.
And that's in French, but let's subscribe in English.
So great. So these are some of the examples of the activities that are being done to actually incorporate risk management and insurance services in financial service providers, MFIs in this case. And we know these are just the first steps, and some of the lessons that are being learned are being incorporated as we go along. But the house is now open for questions, responses, feedback, experiences that you may have. And I'm sure the panel is able to respond to some of them. Okay. Yeah.
Hi, so I'm Cassandra from Finca Impact, and my question is on product design. And I think, Celine, when you put up your slide just on the different products in different countries, it was pretty apparent too that each country, of course, had a differently designed product with different benefits and I assume a different payout structure. So are those differences really driven by the partner that you work with in different countries? Or the client, and obviously how do you approach that, I guess, so that you are balancing the client need, because they, you know, certainly both need to see the benefit both initially when they sign up, but then the ongoing benefit to continue to see a value, you know, over the long term.
Yeah, so we Before implementing any insurance operation, we conduct a field survey to understand better the risk that our borrowers face. What are the risks that are the most impacting one for the family financially, the most frequent ones, and how do they cope with the risk, how do they prevent the risk, how do they do when the risk happen and all. So all this, it's quite a long questionnaire, but it really helps us to understand also what do they do when they are sick, who do they meet, and do they go to the pharmacy, to the doctor. And so it really helps us to better understand the context in each country, and then to go to the local providers with like some specification of the product that we would like to have, and then it's a negotiation with the insurers locally. Of course, we always go to a local insurer, so it's really the best offer that we find. And then we test, we pilot, and we go for the whole country very quickly in order to have claims also quickly. Then people, they can see the value. The good thing with health is that people, they are hospital people, they will have claim. So they will see the value. What is also important for us is when because still, hospitalization is 2%, the frequency of an hospitalization. So what is really important is also to add some health services, health education, or telemedicine, some services that people can get even if they don't go to the hospital at any point of time. So, and then we conduct some satisfaction survey. The renewal ratio also helps us to understand all the technical ratio that we follow, help us to understand. There's with some insurers, there is a welcoming call. After 1 month, they call again to see if the insured has understood the product, what they need to do if there is any case. So this is how we follow.
Great. So need analysis, provider identification, and regulatory issues. So those are the kind of, by and large, the holy trail that goes. And value-added services is a great example to make insurance more tangible and more understandable in that sense. Yeah. Yes, Matt. You'll have to speak. I wanted to call you up on your analogy of a car. Okay. You were using the brake as an example of insurance. In a car, you use a brake a lot. But insurance is only used very occasionally. So I think you need to adapt your analogy. Thanks for this. And that's why you need a clutch. And this clutch is where the multi-stakeholder approach comes in, and the role for the government and the role for the regulator comes in. So thanks for pointing that out. But that's, I think, like I said, the third part, the clutch comes into play, and we kind of use that in that sense. Yes, ma'am.
Thank you, the panelists. I totally believe that micro MFIs are the right place. But on the cars, I'm not an expert. I walk. Had the pleasure to live in countries where I can walk, but also in some countries where I couldn't walk, but still choose maybe buses or public transport. There is one thing with MFIs, especially for those segments. There is no client, be it in every kind of segment of pyramid, that doesn't think of, doesn't have a moment in life that they needed this insurance. But they don't call the clients, do not know insurance. And in native language, I was living in Mozambique, they talk Emakua. I couldn't find any word for insurance, but they know poupança. They know because in the village groups or those groups that they do saving and credits, they have the saving box. And there is no one in that group that if the MFI knows the life and use the life cycle, the only thing that I would always for myself think and client is the cycle moments. So when the women get married or pregnant and have children, they would need something extra. If the children get sick and then they want to educate. But the issue with the insurance and selling the insurance and designing the products according to the life moments or business moments is that the operational model. They go to the saving box immediately. And when they have a claim, it depends all on the regulations, how fast they would get the money. back or from that insurance. And that, I think, is something that all of us, we need to think when we design the products, especially an efficiency, let's say, on the getting back the claim. That is, and there were some good examples, I believe. Otherwise, that's the reason maybe why we have 4. In some countries like Mozambique or Eastern Africa, still it's not working properly because the infrastructure of insurance, it's not there. It's needed the regulation, infrastructure, and the claim. Otherwise, clients would go to the savings, their own, or to the saving box, the groups, let's say. That's my own reflection, why we have also those 4, but there are maybe in Cambodia, it's another. I have never been. I think the environment there, the ecosystem works in some countries better, let's say, the infrastructure of insurance. And there is a lot of work of financial education with the people to find the right local name for the insurance. Thank you.
Great reflections, the question and the answer itself, so very nicely put, very elegant. We'll, of course, take these, and you've correctly identified that insurance requires effort, and I guess some of the panelists mentioned to the effort on consumer awareness that needs to be put in, and I guess program you saw some of the exercises that people are doing to ensure that people go out. I'm sure if you go around the room, you'll have great examples of consumer awareness exercises that have been done. I don't know if you're reflecting on that on some other take, but please go ahead, yeah.
Michelle from CIA, thanks for a great panel. Philippe, I guess I'm just interested in, of the 40 plus partners of ACRE, who is the one that you're most excited about? Which is the one that's bringing the most value to customers?
I don't have a specific name in this, but I think it's one, and I don't want to make publicity as well. So but it's an insurance company that has been really quite active in providing the services and trying to reach the people. So I think that's why I think that there's a need also, of course, to work with this, of course, the insurance company and to convince them to reach this type of people. And I think that's another issues. But as I said, our focus at the level of the foundation is really to work with the MFIs and to ask them, or to try to convince them to do more than what is done, even if it's a long process and so on. But of course, insurance company can. I mean, at the same time, I think, I don't have the figures in mind. I don't know if you do have it. I mean, the percentage of people served directly by insurance company compared to MFIs and so on. I don't know if we do have the figures.
So actually, this sector is all channel oriented. An insurer will very, very rarely reach out directly to the customers in this segment. It will need to go through partnerships. So whether it's MFIs, whether it's credit unions, whether it's farmer associations, whether it's cooperatives, SACCOs, depending upon which sector you are in. And I guess it's an important point that it's not just the MFI's responsibility to seek out insurers for them, but it's also the insurer's responsibility to have processes and systems in place so that MFIs can work with them. So I think it's on both sides that efforts need to be required, and Philippe very clearly pointed out that MFIs are not good distributors, as he pointed out. It's possible that the insurers haven't been able to find that sweet spot to work with the MFIs. So I guess it's a both-sided picture. Yeah, Philippe.
No, I just want to add it. For example, I mean, we have been, ACRE, I mean, the main shareholders is ZEPRE, and for example, they contacted us to say, okay, help us to reach MFIs. It was very interesting. I mean, it was very interesting because, I mean, we realized that, I mean, they didn't have first a good knowledge about this market. They didn't have direct contacts through the insurance, and they didn't know how to reach them. And so it's mean that it's a long process, this partnership. Of course, it's trying to put people together, make the links, and because I think the willingness is there, but I mean, how you find a way, I mean, how you get in touch, how you talk to people that don't talk the same language, don't have the same cultures. I mean, it's part of the training with ILO, I mean, to explain how you deal with, as an MFI, it's how you deal with insurer. I mean, there is a very good, interesting experience here in Cambodia, but I mean, the chance in Cambodia is that the shareholders of Shamron owns a company, an insurance company. And we're working with another in Africa where, where we have both insurers and MFIs that are owned by the same groups. So that's where links are there, and it's easier, but it's not the majority. It's not the majority cases.
Yeah, so we are slightly out of time, but I'm sure we can continue the discussion moving forward. But just to kind of bring some of these things together, just quickly look at what insurance can do for MFIs and their members, both for the members themselves, and these are live examples that we are sharing, not just vulnerability recovery, but also getting them back quickly. So all this work about building back better and doing that, insurance perhaps has proven to have a role in those activities through MFIs, in climate risk related activities definitely, on disaster risks that are there, whether these are small stall owners or even at the time of risk. So we say Credit Life doesn't do it, but Credit Life has provided benefits to people and that are there. And for the MFIs themselves, they have used insurance as not just income stream, but also members' loyalty. So stickiness is required. Yannick mentioned the competitiveness in markets, and I guess that's where insurance can provide that value plus to customers in that sense of the term. So without belaboring the point too much, we are of course inviting all of you to please feel free to discuss with us, and please feel free to start small experiments in your local things. You can always get back to us in case you need support and help, and we can organizations such as microinsurance can put you in touch with local stuff, but also all of us are open and bearing with that. Insurance can work in a lot of scenarios. If you were there in the previous session, we had Hanadi talking about how displaced people are getting impacted, and we are now experimenting in how insurance can play a role there. So on these small notes, I'd like to thank first and all of you for coming in and sharing and being with us through all the time that we have spent here. A lot of you are repeat visitors to insurance, so thank you, ma'am, for coming back and continuing to share your examples, and look forward to continuing these discussions forward in more sessions. Thank you very much.